All right. Hi there, guys. Just let me know if you can hear me. Have you started? Yeah, you'll hear me in a second there, Bobby. Hiya, Pete. And Huge Bell, is it? How you going? Let's just wait and see to make sure you can hear me okay. All good. Fantastic. All right, let's get going. Welcome to Trade Setup live stream. It's the 6th of December. So kicking along nicely. And not so much in the markets, but we'll have a bit of a chat about that. G'day, Farrow. Hope you're all doing well and staying out of trouble. Um, I know we're hanging in there. It's actually just more frustrating to see this choppiness in the market, but that's going to happen. You've got to expect that from day to day. Well, not day to day, but from time to time. And that's where, yeah, it's been down and down. So they were closed last night. What they have is it Bush's memorial or something like that last night. So the bonds which caused the problem the night before, and that's probably why they got hit a bit harder than they maybe usually would have. Coming into that, the public holiday, I guess. I don't know if it was a public holiday. They were just closed down. So the bonds and the stock markets were closed down in the US. We saw Europe. They played catch up last night. So the DAX was down, I think it was 130 the night before, at about 130 to 40 last night. And the FTSE was down about 100 last night. So just playing catch up to the previous night because they closed, I think pretty much an hour or just into the start of the US session. The indices closed down, and what you see pretty much after that is just the futures banging around on those two markets, on the European markets, but they're pretty much closed when the US does the bulk of the action, especially if it starts ticking off during the session and into the close, like it did the night before when it just pretty much fell out of bed. Um, all right, well, we'll quickly go over anyone that's watching this that's new, or anyone that's watching this later on that's new. Welcome, and you'll see us. What's on the screen there is our trade setup. You'll see our websites, www.tradesetup.com.au, and the stream details. If you can join us on Twitter, which is our top left-hand corner, it's our Twitter handle. I think it's a technical term. Facebook, the top right, bottom is linking to us at YouTube. Subscribe to us at YouTube, and that's at Trade Setup, capital AU. All right, get that out of the way. I'll minimize that now, and we'll just get into it. I forgot to do that. There we go. Maximize the screen, so you should see the screen popping up in a minute. That's just our Spark system. So what I want to go over today, I want to, since there's probably not a lot to talk about overnight, nothing's really changed. The news is pretty much along the same lines. I hope everyone understands. So we sent out in the alert, I think it was this morning as well as yesterday morning, about bond spreads, and there was a good little link I put in there just to understand the yield curve. Everyone's talking about the yield curve, and if you haven't got any experience, with bonds and the way they work, the yield curve is a big thing they're looking at. Now, the last time the yield curve flattened out or inverted um, was prior to the GFC. So, and it's starting to flatten out now, even inverting, which means shorter dated bonds are higher yields than longer dated bonds. So the 2 and the 10 years. So the 2 years in the US versus the 10 years, the yield curve there. And they have the yield, which they're just plotting on the graph. And when it goes inverted, meaning that longer dated, they're looking like lacking growth, I guess, when you've got long dated yields, which are closer to zero than, say, or closer to one or whatever it is, than your short dated 2 year, then it's sort of marking the end of an interest rate cycle. And that's what they're talking about now in the Fed. And that's what's concerning to people. They're talking about it's not so much, you raise rates when things are good. You cool off on your rate rises when the inflation's everything's coming in check. But generally, that coincides with a bit of a contraction, I guess, there's no more economic expansion. So that's sort of what we're looking at facing now, and that's what the market's been worried about for a while now. And I think that was more the sell-off on the yield curve starting to invert or flatten out at least than um, your typical, your Chinese US trade tariff scenario. And that also obviously had a factor in it. And that's what's concerning markets as well, because that's obviously crimping on growth. You got the global growth is slowing right down. Then they start to look at the bond market, which bond markets are, I guess, I wouldn't say quite advanced, but a bit more in depth. They're sort of a leading indicator, a lot faster moving. Well, they move to things earlier than your stock markets. So yeah, and that's starting to point towards, we're not saying that there's going to be a big fall on the markets, and maybe that's what the markets are factoring in now. Who knows? But it's sure causing a bit of nervousness around the trap, especially in the US. Um, our numbers yesterday also saying that there's growth is not quite as we had some rough numbers. I can't remember what it was. Rough numbers out yesterday, and the RBA was talking about it in their minutes, saying not quite as good. So that's taken off rate rises in Australia anytime soon. I mean, we weren't looking at raising rates soon, but the numbers were slowly ticking in the right direction. Now we had something that's sort of ticking in the wrong direction, which means that Australian growth or our economy may be slowing if it was expanding at any rate, slowing, which is never a good thing. So that wasn't good for the Aussie. The Aussie got knocked in the head after that. Um, yeah, and you can find obviously we're down 42 at the moment, so wouldn't have expected us to be down this much. But maybe we're just making up to what we bounced yesterday. So yesterday was interesting little bounce. We were down over 100 at one stage, and we ended up down 44. So we nearly rallied about 60 points or so into the close. We pretty much opened down, retested, made a high low, and then took off after that and just grinded our way back up. So rallied 60 points off the low yesterday, which is a good little sign. I don't mind that sign. And you can see that this is the XJA. We'll get it on a different chart. We'll go over that now. My weekly is sort of the one I'm interested in. You can see we were talking with Davin earlier when markets are stretched on the downside. You can see that I use my stochastics to see sort of what pressure is under the market, and it seems like it's well and truly the known at the moment. So it's flushed out a lot of late traders. Anyone that's sort of got late into that trend up, anyone that's been holding for quite a while, even say mid last year, buyers that started lifting it off that pretty much 5,700 mark. It's been rallying up a good part of about a year or so before we capitulated in a couple of months. So a lot of that potentially what we're looking at now, when the markets get stretched away from the MAs, I'm ideally looking for a bit of a bounce, whether it's going to be the start of an uptrend, change in direction, or what it's going to be, or just a straight out bounce before we roll over deeper. Or whether, potentially we've just seen that with this little pop back up to 59.50 zone recently. When the markets get a bit stretched away from the MAs, it's at less likely, we're talking about probabilities here. The probability it's going to continue down straight away from here is getting less likely than it would before we see a bounce. And that, when you couple that with the fact that we moved off those highs around 64, that pressed down and we started to grind up, and then we had a good acceleration down, another green week, and then bang, straight back down again. Now we're starting to get a bit choppy. So the choppy price action is more conducive to maybe there's someone starting to edge into the market. A lot of the selling pressure has already come and gone potentially, or it's starting to ease. It's probably early days yet, and today you probably wouldn't believe that, seeing it down 37 today after the market was closed last night. And actually our SPY was indicated to open up about 10 points, and I think it did. It washed out, it popped up 10 points, and then pretty much dropped since there. You can actually see that. Let's look at that intraday. So this is the intraday. So you can see it actually opened up where it closed yesterday and then just started selling down. So the pressure is quite, it's been fairly consistent. See, that's with the ASX. We're down in that zone. I mean, whether it's going to hold that and we're going to start finding some buying, start to tick it back up again is yet to be seen. The daily chart, I mean, that's not suggesting, sort of that reversion to the mean. We got extended. We're down at 56, had a little bounce to 57.50. We're back down here towards that 56, 56.50 zone now. So if we can't get through this time, and we'll see what happens, and obviously we're led around by the US as well. If we can't start to lift from here, then this thing could extend through 56 and really start to put the squeeze on. But like I said, when you see moves like this that have taken up quite a bit of energy, we're talking energy in the way of sellers that are prepared to get out. It's taken up a lot of that sort of selling pressure already on this move down, and we're talking from 63.50 from these highs right up here. It's taken out a lot of that energy. So whoever's left on the sidelines that wants to sell maybe they're looking at they're starting to change the tune. Maybe it's a bit late for that. There's a whole lot of factors that what we're looking at potentially just to hold up here and get a bit of a bounce into the market. But I think it's still got a bit of work to do. And you can see it did the similar type of thing, extended down. This was back in April. And then we started to lift from there and then pull back, got on the other side of the MAs on the top side, come back to the MAs, that reversion to the mean on the other side, and started to lift from there. Got a bit grindy coming into the 63 mark. But yeah, that's what we could be looking at. Whether that's going to happen, I mean, that's all we have to just wait and see, and we just trade as we see. But yeah, we'll have to see if this can hold up around that 56 to 56.50, 5700 zone. It's quite a broad zone, so no reason to hurry into any longs just yet. And just being patient really to see what happens on the news front with China and the US. I think a lot of traders, after that initial bounce that we got, have given up that pretty much. But after that initial bounce, I think that euphoria that, okay, they're taking a few steps. Once people digested that and realized that, okay, whether or not it's going to be a bit more of the same, more nothingness, more talk, where they're going to start to, I mean, China said they're going to do this, this, and this, but they said they're not quantifying how much. Gino. They're not quantifying, they said they're going to start buying these products, but they're not quantifying how much they're going to buy, so it's actually, they're still got to negotiate in that. So what China's doing is say, okay, we'll do something after all this negotiation. Yeah, we'll do something. We're going to take steps in the right direction. And then there's going to be all this negotiation on how much in the year. They're going to be back and forth, you would expect. So I think it's going to be a bit more drawn out than what we think. And look, anytime between now and then, you got your 90 days they're talking about with the trade tariffs. Anything could happen. You just don't know. It could fall apart pretty quickly. As you'd know, with egos like that in check, trying to keep that in check is going to be quite tough. Yeah, that could continue to put just downside pressure on the market. We'll have to wait and see. But again, it's those bonds that are more spread. I'd sort of be keeping my eye on for now, just to see how that plays out. It might mean that it goes from flattening to inverted to start to pick up again, because then you'd start to look at shorter dated factoring in, and what are you saying? End of an interest rate cycle, and then as you go sort of out towards the 10 years, starting to lift, because they'd be looking towards, okay, over the next 10 years, we're going to start to raise rates. We're going to get through the tough spots, but obviously there's going to be a few triggers that are going to trigger that to happen. So whether we're factored in a lot of that already, and it's more of just in the news, it's going to bring the fear into people, or whether there's more to come. I mean, like I say, you can't guess the market. You've got to trade what you see. And I think what I want to just touch on today is actually trading what you see, and trading, things like this, when you pull back to the mean, you reversion to the mean style of trading, and lifting when you know that the markets are stretched. I mean, the ASX may bounce from here, it may not, but if we can get a nice little stock that we sort of coming through the MAs and pulling back and sitting on top of them, and then you get your setup like, say, this, for instance, what we've seen back in June, just in here, then that's ideally what you want, especially if you couple that with the market being stretched to the downside, and maybe we're just looking for a straight out bounce. Don't care if it's going to bounce and fall over, or it's going to be start of a new trend up, or we're just going to consolidate sideways. But either way, if we are on a lows somewhere down here, you would expect a bounce. And whether it's probably going to be, if you bounce back above 57, or even back to these highs, you're looking towards 58. It's a couple 100-point bounce, 150-point bounce from here. So I think you can get a nice quality stock that's lifting off the MAs like this on the upside after it's a corrective action. Then you're probably going to be on the right side for a move up. So I just want to touch on that today. I've got a couple of examples. No need really to go over what's happened in the US on the chart side of it. We talked about it on Monday. I'm just looking at my notes here. I do occasionally write a few notes. Any questions, just what we're talking about? Yeah, not so much positive, Bobby, but what I'm looking at is more, you've got to look at things from, forget about what you hear, because the last things to know, that the news only ever get on the bandwagon. And when we're talking about getting on the bandwagon, we're talking about the majority of people knowing what's going on. When the majority of people are knowing what's happening, that the market's capitulating, they're either out and on the sidelines, or they're getting out. And then, so you got to look at it as in the way of fuel to move down or fuel to move up. If we're going to move down, okay, it's obvious now. At this stage, we were looking at a short here, and that's more what we were aiming to do. I'll draw that up. Well, even though we missed it, I want to draw it up just to talk about the difference between Um, selling into the known, selling or buying into the unknown when your payoffs are a lot better, a lot higher than say selling now. I mean, say you're selling for a break of this low and you got your stop just above here. Is that going to be low risk, high reward, or low reward, high risk? Because you pretty much come all the way back down from the high. So what I'm trying to say is that when you're at this stage, we're still in the unknown. Okay, if I can draw that up, this area is ideally what you'll look for. We've pretty much sold off quite hard. We've popped back up, and we've pretty much popped back up when the MAs are crossed. We've consolidated, we've retested the MAs, and it's that reversion to the mean. So there's going to be a whole lot of bargain hunters in there, people buying because they missed out on the buy up here. They think it's still going up. Whatever reason, there's going to be a whole bunch of traders looking to buy that. And then when it starts to roll over, they're going to be squeezed out, along with people that didn't get squeezed out at the start. People, you got a whole number of traders. Don't forget, you got traders that react fast, traders react slow, traders that don't believe. Your bulls, your bears, all these sorts of things. A great mix of traders, and you're not going to get the first bunch of them squeezed out on that first move. There's always going to be people that you move down and then you start doing this type of thing, going, good, lucky I hold it. I didn't get squeezed out. I'm not stupid. I'm a bright spark. And then, of course, you start to get this type of thing when it starts to move down and they start to realize that they're wrong. You've probably got traders that sold on a break, breakdown through here, just, okay, I'm consolidating, I'm out, they're fast. Okay, so that's your first initial wave there. That presses you down. And then we start to get these traders that are acting fast, are reacting fast. We run out, we use that sort of fuel up for a downside move. And then you get these type of move back up. And then you get that secondary wave where people are going, oh, hang on a second. Anyone that missed this is looking at it going, that's not strong. And then you got this breakdown here. I might draw this a bit clearer. This is what we're looking at, this breakdown here. So you've got a breakdown there, a pop back up. If you're there and you're not out at this stage, especially if you bought it anywhere in the last 4, 5, 6 months, pretty much above 61, you're going to be concerned, aren't you? If you bought it above 61, anyone from here up is going to be concerned because they've been holding, whatever stocks they're holding, or if it's just purely the index. You're going to have to be thinking twice if you start to get this lower high playing out, especially this structure after we squeeze back up. We pretty much reverted to the mean or contracted back up to the averages, which is the MAs. Then you're starting to roll again. So there's that secondary wave of pressure starting to build. And then, okay, if you had your sell in there, ideal. And then what's happened there is all, with history from there. But what I was just really trying to explain is work through in your head, I guess, just work through in your head of what you think's happening. What does this mean to traders? What does it mean to the psychology of traders? Especially when you see this type of price action, when it starts to grind back up, that's not a strong market at all. And we've only had that sort of initial wave down, that one push down, bit of a grind back up. And generally, I'm always looking for things in two waves. And this is revert, this here is just the opposite of what's happening here. Reversion to the mean, push up, pull back to the averages, and we start to lift. Drop, pull back to the averages, and start to drop again. So it's the same type of structure. You're looking at the structure of what's happening, and you can see it's starting to lift here. We had a nice little entry just through that pop off the MAs, and you had, probably, what's that, good 150, 200 points rally on the ASX there. So there's more than enough opportunity to look at that thinking, I want to be a bull. I want to be either a bull on the index or a bull on the shares. At this stage, no room to be a bull at all. You want to be a bear. Okay, so you want to be defensive if you got your stock portfolio. This is where we start. I think we got squeezed out of a few here, and then we got out of a few, just booked some gains on a few others just to reduce the exposure, because this to me was really starting to roll over. And we actually missed. Told you a few times we missed a good short on that. I think it was this little spiky on that green candle there. We got the order to sell was cancelled, and of course the thing dropped like a stone after that. So yeah, what we're trying to say there is in this stage here, that's the unknown, and you always want to be basing your trades around the unknown, not the known. In here, when you're starting to sell here, I think that's too late. And if it's too late, maybe we're starting to see that base hold up there. So yeah, just what I was, I guess, trying to get to there, Bobby, is more that I think we're well and truly in the known here. Anyone that's been trading, if you haven't got out, you're under pressure. Everyone knows that it's in the news, and I think the news don't really start to anticipate. They might talk about the breakdown here, but then they talk about pure capitulation, and everything you read here at this stage is bad. And of course, that's putting the fear into people, but it's not probably the best thing to listen to, because when most are fearful, you might want to start looking for a potential pop. I'm not saying that's going to happen, but you obviously want to start looking for the structure that's going to reverse this move down, this big move down, and you want to see evidence that we're starting to base. And maybe that's one. We've got one touchdown here. That's your secondary one here. Maybe a third one there. We're starting, whether or not we start to lift from here. I mean, the MA is not looking too good, but I'll be looking for this type of move up. Not saying that that's going to happen, a big move up, but you want to see a pop up and start to consolidate maybe above the MAs, or the MAs start to contract in it. And then looking at that daily chart, it may be a long time coming still. So yeah, nothing here is the unknown 21. We all know what's happening. More the unknown is going to be on the upside. Okay, does that make sense there, Bobby? Hope that makes sense. Anyway, so that's my ASX. I think you've just got to. It comes down to practice. I mean, it's actually really hard, and it's hard to go against the flow of thing, the flow of things. And this is where even I was talking about it with Davin today, and he mentioned just forget about it. What your fundamentals, because if a chart's looking good and there's reasons to buy it, and the structure's looking good, then okay, I'm happy to jump in. I think you just got to. It's more just trying to train yourself to, that sort of thing, trading off that basis rather than what the herd's doing, the herd mentality. Yeah, there's fear around. We shouldn't be in the market. And sure enough, you'd be probably buying at this stage when it's a bit too late. It's more the known. So you're always trying to aim for the unknown. And times like this, because we're out, I'm really just looking for a zone to be starting to edge back into the market. It's not there yet, and I'm still hoping or looking for this to hold up. I wouldn't say hoping, but looking for evidence that this zone is holding up and lifting. Otherwise, I wouldn't be looking for shorts either at this stage, especially if you go down to the weekly. Look how far the weekly is away from the MAs. And on the upside, it never really got that far away at all. So you sort of get those moves away from the MAs. Like up here, it started to bounce. That's where it found its lows. Even in here, it really started to stretch. The market stretched, and it stretched to the downside at the moment. So any shorts, you're going to have to think twice about. It's got to be a prime setup, and it's got to be a setup, say, like this. It's well and truly, it's been up in a good, strong uptrend. And then you got your lower highs coming into play. It's looking like it's starting to break down. If you're wanting to short into a stock now when the ASX is here, because imagine if you start to look for shorts and you're jumping into shorts and the ASX bounces, it's going to cap anything you got on the downside. And it's a lot harder to short than it is to go long. They don't last as long. They're hard and fast. Whereas when you go long, it can be just a nice grind higher. It's just the nature of the index, nature of stocks as well. All right, I wanted to touch on in this same theme, I guess. I want to touch on a couple of stocks. I think it's worth talking about. Now, this is one we've got. I think we got in from 217. Now, for me, it's probably actually quite aggressive for me, to be honest. An aggressive entry, but you can see that structure what they're looking at, and it's probably more evident on. Yeah, we'll have a look at Wes. Have a look at Wes soon. Once I get through a couple of these guys, just chuck in some share codes, and we'll look at those in a second. So this here is more along the lines of just what we're talking about, and if we can drill in on that, you can see what I'm talking about. The market's gone. Like we say, it's going into expansion. Every time it starts to pull back. So I've got a stutter today. It pulled back. It sits on the MAs and starts to lift again. We're getting support off the MAs. I'm not saying that's your technical. Always look for your MAs. You're looking for your structure. So you're looking for, potentially a buy. You can see on a break through what's that 180, which is here on this green candle, because it's sitting on the MA. So it's confirmed once it starts to lift there. You come back. You took a bit of heat then, but then it started lifting again. It started lifting. Then you come back down. You got a green candle here, a couple of reds. That green candle might be in a little entry, and especially on that secondary candle, that second green candle when it started to lift. And then ideally you've got that break through the high. What was that? High 223. I'll draw it up. So this is along the same lines. You're trying to work out the structure. There could have been a nice little entry here. Probably after that was a bit tougher. Brian on this candle was a bit tougher. In here, could have nice entry here. You can see it lifted, pulled back, and you got that lift. You don't know this was going to happen when it start to roll over, but you can see what we're saying is that it's reversion to the mean. The market lifts up, it reverts to the mean, builds your high or low, up she goes again, gets extended here, gets a bit extended up here. I mean, you don't know where that's going to happen, and this is all the beauty of looking at things from a probability um, from a probability perspective rather than chasing the market, because you chase the market, you're probably going to get the high, and if you happen to pick this high, then you're under pressure for a long time, and you'd rather be out of a market when it's doing that. If you pick this high, you bought up here, eventually you spend a few months, it's come back, and then you've been in profit again. But who's to say that was going to be the overall high before you have a major correction, like I was saying here? So you don't want to be chasing. If you do, like I said, never chase. Always wait. Wait till it pulls back and look to see what happens on the pullback. What's the structure doing? You can drop. This is a weekly chart. You can always drop down onto the daily to see what the daily is doing. Just 1 second there, guys. Just be a tick. All right. So you're just looking to see what happens. Okay. You don't want to buy in here. You know that. Okay. If this keeps going, all right, that's just one you're going to mark down that you missed. I mean, it's pretty clear. And you move on. You move on to something else. But when you get them to get a bit of ahead of itself, it pulls back, and then it starts to sit on the MAs, like you said. Then you're looking for your setup, and you're looking for your entry, and you're just looking for it to continue on up. And you can drop down if we're looking like this is the daily, isn't it? No, it's the weekly. I don't know what it's saying daily. This is the weekly chart, so you'd probably be dropping that for a daily just to refine your entry. All right, so does that make sense here, guys? Just what I'm trying to say. So this is ultimately like we're trying to see a market that's lifting, um, going into expansion. If it's on the weekly and it's rallying, and you're just looking for your pullbacks, you're looking down to your dailies to find your entries, and away you go. Now, don't forget the market goes. This is all expansion. You've expanded up, so sooner or later you've got to assess this. Say you're assessing it at this stage, you're going, okay, it's moved up quite a bit. You've moved up from say 150 and you're currently sitting at 220. That's what, 50, 60% rally. So you've got to look at it from the bigger perspective or the bigger picture, looking at it thinking, well, how far, when we're no longer in the unknown now, I'd say we're talking about longer term traders. We're no longer in the unknown. We're more in the known, what's happening. So times like that, you've got to think of it going, well, what sort of chances are if I buy, it's getting a bit of a high chance that we're getting away. The MAs are spread. You can see when the further they're spread apart, the more of the known you're in, or the less likelihood that it's going to continue. And you look for the MAs to start pulling back in. Now, it's ideal when they can pull back in and you get this squeeze. So you've got the market going into contraction. So if we just draw this up in a different color, ideally, this is what we're talking about when we're contracting. And this is all part of a bigger move, potentially. All right, so this is what we're talking about: expansion. You want to buying into expansion, and then selling, well, getting out or just watching, anticipating when it's going to go back into expansion. So ideally, this is what we want to happen. We want that to go back into expansion. We want that to take out the previous highs and continue on up on the weekly chart. Now, the reason why we're buying it is obviously if we can clear. I'll do another. The reason why we're buying this, the reason why I liked it, is because after a bit of analysis, a bit of drawing some pretty lines on, you can see that to me, this was a good zone. It's touched on it, 1, 2, 3 times, and the price is contracting. That's starting to hold, and then you'd start to think the second time, okay, a good little pop off there. That's attention from the whole group, and other buyers are starting to perk their attention or perking their interest. And the third time, they're starting to perk in their interest, and you can see that the selling pressure is slowly running out. A lower high here, lower high here. That's all selling pressure coming in. Sooner or later, that's going to break. And of course, you got this pop up, and then you're looking for your first pullback. So we're looking for this type of action when it sits on top of the MAs. You can see the MAs are slowly coming apart. We might be fighting a bit of an uphill battle just at the moment because of the overall market. But ideally, that's what we're looking for. And I think that was where we got in at 217, was pretty much right there. And you can see why it's pushed up That's your first pullback to the MAs, and that's your unknown. Okay, so we're looking for that there to just continue on. If we can get a, and I think this is looking primed to start, what that's going to do is this is the second time it's starting to sit off these MAs, sitting above the MAs. So that there is going to drag in a few more buyers that might have been are not are not happy to get on that first pullback or want more confirmation. Okay, so what we're doing is looking for that structure that's setting up, and we're interpreting that structure, this price action, for why we want to buy it and why we're starting to buy early stages of expansion, not we're buying into that contraction. We're not getting caught when the market's, choppy between, it's just range trading. You don't want to get caught in that. You want to get, you don't want to get caught, but you want to start to buy when it's starting to show signs of it expanding again. And this market is, I mean, this is RFF, rural funds. So you can set that's popped up to that 220, had a pullback that was getting rejected off that 210 zone and then started to lift. We bought it on the lift, and that was mainly from that whoops, I can get in here, just in here. And you can see we're anticipating that was probably an early entry. Normally, traditionally you'd take it through the 221, 222, but again, we're coming off higher lows. So that's all really strong evidence. And this is an inside level, which I love trading inside levels. Inside levels is going to get you ahead of the herd. So if you are wrong, you might be up, sitting on some profits, and you don't have to worry too much, and you can, close out at a slight gain or break even when you realize you're wrong. But if you're buying with the herd on the breakout, if you're wrong, you're probably going to take a loss. More likely than not, you're going to take a loss. Not that I'm expecting to here, but I think this one, it's a good example of your pullback. That's sitting on the MAs for the weekly charts, and we're starting to lift again, so that it's showing good confirmation that there's more buyers starting to step in. You've got to pull back to the MAs here. It's starting to reject the daily MAs now, which I would suggest, as long as this market can actually, this one could be primed where if the market does lift, this price action is showing, to me, is showing bullish price action. And I think once we get through, it's about 226, we're going to blast up and through 229, and we've got a partial up towards that 240 zone, which would, I don't know what that's, 15% gain on that. But look, we'll see how that goes. But that's a good example of what we're talking about, sitting on top of the MAs and rallying. I think there's one other. I just wanted to show you, if it's this one, if you could look at, it's probably ideal. Look at again, it's a similar structure. We're always looking at that similar structure. If I can get it drilled down a bit, even in here, so what you can see is just looking for your prime zones. Even if you take the time just to draw up a couple of charts, I think this is a prime zone. We actually alerted it somewhere in here for a rally. We're getting stopped out somewhere, only for a minor gain just before it took off, which still kills me to this day. But you can see this is your, you had this pop up, your first sort of a pullback, then we started to lift. You can see it took out that anchor. Then we had the first sort of a pullback. It took good part of about 6 months to play out, but what it did, you can see that was just leading to that rally. And then this is your weekly. If you go back to the daily, and we just, I think it was in here, wasn't it? You can see it was in here, and you got that lift in there. Or actually, no, it was just here. So right back here, you got that contraction in, then you started getting your higher low on the daily. So when you got your higher low on the daily off a higher low on the weekly, yeah, it's a high probability chart. So high probability setup. You're buying in the unknown, and of course, you can see that the way it just took off here further. The market's contracting in. You start to hold some lower highs. So lower highs in here and the higher lows, and then it starts to lift. As soon as it breaks one of those higher lows, you're looking at that first pullback, ideally in here. What you can see just in here, when it's sat on top of the MAs, and then of course after that, it's all history, and it started to lift from there. Does that make sense? That's what we're looking at. I thought there was a nice one in here as well. That's longer term contraction. You can see all the way from pretty much the left hand side of the chart. You've got this is PME. You can always look at that. Actually, it wouldn't be bad if you took the time just to mark up PME. Just go get the chart, mark it up where you think prime entries, just so you got something to refer to and what you're looking for and why. Take a few notes and away you go. And it's always something to refer to. I've done it for years now. And it's just on a side note, it always helps if you're doing things like that. When you start getting a bit lost in your charts, I mean, there's times when when you're getting confused, when you're seeing things that are not there. It's always good to refer back to your charts on times when it's a solid setup and just you've got your notes there, so you can it triggers your memory and it triggers your, what to look at properly. So when you look at it and it triggers all those memories and what's an ideal setup and why, then you can go back to where you are, and it probably helps you pull you out of maybe a bit of a losing streak or a bit of a rut that you could be in. I think it's a great little tactic just to reinforce what you should be looking for. So here you can see the MA, the market was rolling over here. The first one, it was started to lift, and this is probably the first time. I'll just draw that up quickly. Here's really the first time it started to sit on top of the MAs. It really didn't do that. Here it didn't. It was just grinding higher. You didn't. Ideally, you're looking for a pop up, pull back to the MAs, and if it chops around here, that's great. And then you're looking for that entry when it starts to lift again and it starts to expand. But that's your first heads up that, okay, this is our pop up, our pullback, and this is when it started to lift here. I think this is where we got washed out there just before it took off all the way up to above $12. But you can see what I mean. That was your first sort of it come back, and the longer time it spends sitting on top of the MAs, and you can see each daily candle was slightly higher high, or the lows slightly higher low. Sorry, each day's lows was slightly higher than the previous. As it sat on there, the longer time it spent, which was a good part of a month, I think. Yep, good part of July. This is all July through here. It did that the most part of July, and then you just got bang, you got your entry, and away you go. Does that make sense here, guys? I hope so. Right. Now, let's probably enough of that. I might as well get into some charts and see what we've got. So yeah, ideally, I'm looking at PME. It's very early days now, and I think the problem with PME at the moment and what we just had, this is a bit different to this price increment to start to lift, and you can see ideally you got a low volatility environment and you're going into high volatility. High volatility means it's starting to expand, it's starting to chase its high. You got when it goes into more of the known, when everyone's starting to see what you're seeing, and you're right, that's when the volatility starts to pick up. They start to chase it higher, and that's great for you. Then really you're flipping it around. And you're starting to look for an exit to book some partials. So at the moment, what we've got now, the market's come back down and had quite a bit. Volatility's expanded and quite a deep pullback. It's come all the way back down to sort of this 850 zone. Pop back up. We come back down and retest it. There's not really volatility coming out, and this is the first time we really pop back up through a key level. But ideally, if we can hold above 10 and we start to get, that's a $10 zone, we start to chop around here, I don't care, and just hold, and you see the candles get narrower range candles, that's going to be a good thing because it's holding a higher level. We chop around. If we can spend a good part of a few weeks to a month doing that, and then maybe we get in this type of scenario and we're starting to sit on top of the MAs when they cross back up, yeah, I think we've got a trade on our hands and we could be looking for a push up through 12 and so on. And even if you're wrong, you get a push up and retest 12, you might have a couple of dollars on your hands anyway. A couple of dollars profit, and that's handy. It's still 20%, isn't it, I guess? Or give or take. First one, Wes. All right, as for this one here, Peter. Yeah. Yeah, look, Peter, with regards to what you're saying, is it now a case for buying support? I think just what we spoke about is exactly the way I would answer that. You're not so much, buying when it's moving into support, as in, let's go back here. You don't want to sit there with a buy order. Well, let's just say, no, let's try that again. All right, this is my support zone. And just say you've got a buy order sitting in here. You don't really want to wait and see the market pushing into that zone because one, you could miss it, or two, it actually triggers you, and then bang, straight back down and through. You always want to be looking for that high low, and ideally, it presses into there. It doesn't matter what it does, but if you get this high low start to play out and it's starting to fail, and buyers are stepping up early, then you look to buy on the rise. Always, this is what I'm always looking to buy this respect. There might be times when it comes down straight back up. Okay, you miss it, but the idea, I think we were speaking earlier, or someone else, the idea behind this setup or trading a setup like that is that, yeah, it could be less aggressive. And what I have to do, as opposed to someone that might be more aggressive, is just look for the stocks that are setting up that way and spend a bit more time searching for the stocks. But what it does, it probably means that my hit rate's a bit better. Okay. So there's going to be times when, yeah, you're right, you get set and you get a nice early entry. I might get something that's a bit later. So be it, we're both right. But there's going to be times when maybe you miss it, I don't. And there's going to be times when it goes straight through and it gets you in and whips you straight back out when it keeps going down. Because you're just assuming that this is going to be a support zone. All right. When you sit there and buy on support. But yeah, if you're sitting by this, what it does is minimize your losses and you're still getting in. You just have to give up a bit of profit potentially, a bit of gains to make sure that you're right, as opposed to taking an early entry and being wrong more often than not. So I think on the balance of things, this works better. Your results will be better than just sitting and buying on support. I'm never a big one for just sitting and buying on support, unless you've got some sort of setup where based around candle setups. What does it call it? Engulfing candle, or a couple of positive days, then buy on the daily break or buying into the close on, when you've got a couple of green candles in a row off support, then yeah, if you've got some sort of system which gets you in earlier and you have, your back testing has said that that works more often than not, great. Then that's all you got to do. Um, Wesfarmers. So talking about Wesfarmers, yeah, it's going down at the moment, and there's nothing on this daily chart. So this is exactly what we're talking about. It's popped up to the MAs, down, popped up, down. Okay, so it's still playing into that, but the one thing it is you'd start, this is no longer the unknown. It's well and truly into the known. So if you go back to the weekly charts, and I'll be based in my trade if I was going to go long, if that's what you're asking. Who asked that? The koala? Sorry, Bell. If you're looking at this, you'd be ideally looking at your weekly. And this is what we were shorting it somewhere up here. So maybe took it off a bit. I think we took it off here, and of course it bounced, bang, straight back down and through. But it was handy. It was somewhere up here, so we took a good chunk of that move. And ideally, that's all you're ever looking for. So maybe we've got some more downside, maybe down to $30. Maybe this is sort of your zone where we're starting to hold up in here. I think either way, I'd be potentially looking into this zone for a bounce. Okay, and that's because it's like what we're saying, just in reverse. It's well and truly in the known now. You know that we've come off the highs. We know that we're heading down. We're starting to get stretched away from in the MAs this way. If I draw that in a different color, I think it might make it a bit nicer. We're stretched away from the MAs to where we are off these lows, and you can see that rejection too when we get into this zone, say around, give or take, around 31. So ideally, I think you'd want to have this pegged, and probably because I look at stochastics, it's gone from overbought to oversold. So that the selling pressure is pretty much, you'd expect it to have been used up. So sooner or later, it's going to find a bit of energy. It's used up that selling energy, and we're going to start to, anyone that's been short maybe start to close out of the short positions, and then what that's doing is going to cause some more buying to come into the market, and then you've got the buying that's sitting on the sidelines waiting for it to pop, waiting for a bounce and looking to buy into the stock. So all that's doing is, I think the fuel is built. The further it goes down, the more fuel's on the sidelines for buying pressure. Yeah, it did, didn't it? But that was when it was up around $50, wasn't it? I think. So it's readjusted. So that's the price is adjusted for that as well. So yeah, so Wesfarmers, I think to buy way too early, because you got to look at the weekly chart. Yeah, I think we're in a good zone, and potentially start to look at some buys. But flicking it down to the daily, we're not set up at all. This could be just a reversion to the mean back to 32. We find more selling pressure. Because this is well and truly the known, but nothing's changed on this structure on the way down. It's reversion to the mean, selling, reversion to the mean, selling, even in here, 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 here. So what's to say that we're not going to get reversion to the moon, reversion to the mean, not to the moon, reversion to the mean, start to fall away from 31.50 or 32 even. We're suckering a few buys, we squeeze them back out. Suckering a few buys, squeeze them back out. And this is what it does all the way down. People are trying to pick a bottom. Pick a bottom here. They think a couple of good candles up, they get squeezed out. Probably a bit more confidence here. then way in here, it pops back up. You can see the MAs rolling over. It squeezes them. There's a big move down. This suckering. Okay, now I've got the bottom. Squeeze them back out. Okay, oh, maybe this is the bottom. Pops back up. They're looking quite positive here. Squeezes them back out. Yeah, 45 bucks. There you go. So yeah, can you see what I mean? So the weekly, we may be coming into a zone where, okay, for buying, it's coming into the unknown. But for selling, it's not the known. It's not the unknown at all. It's the known. We know that it's going down. We know that there's selling pressure. It's just we're trying to pick a zone where it's going to abate, or that selling pressure is going to disappear, and we can start seeing to flip over to buying pressure. We're going to start to rise. We start to lift above the MAs. We might spend a good couple of months. I just suggest that we're going to spend a few months before it bases and starts to build again. And then you want to see that pop above MAs. When the MAs are crossed up, pull back, first high low, away you go. But yeah, I think it's got a lot of work to do either way. What was the next one? AIA. Yeah, so where this is a bit different, you can see that's your daily and your weekly. This is a lot along the lines of what we were just talking about on RFF, and it's probably quite clear. You can see. So I actually do like this one. This could have been a bit of a grind, but what you've got, if we can draw that up, pull back off the highs, straight back below the MA. So that's the first question. You go, oh, hang on a second, what's going on here? Pretty much that's your rally. That's your secondary move down, back below the MAs. Bit of chop through here, sucking in a few buys in here, squeeze them back out with that move down. And then what you got here is start to build a high low. We're holding a high low through here. We've got that consolidation sideways at a higher level as opposed to this low, higher level, then start to lift. Okay, and that's the first time really it pushed back above, a good serious push above the MAs. All right, the MAs are crossed back up again. You first pull back to the MAs, and then we start to lift. It's been a bit of a struggle where it looks like it's just chopping around still, but longer term, I think this is going to have legs to it. And if we can get up and through, to the $7 mark, it might start to accelerate. We get through this high, it's up against a fairly significant potential resistance zone at $7, but it's got all the hallmarks of, again, back to the MAs, bouncing off the MAs on the way up. And if we go down to the daily charts, this is the weekly bouncing off the MAs. When it starts bouncing off on the daily charts, I think that's when it's going to start accelerating higher, and it's going to be worth, potentially jumping into. But we'll see how that one goes. So you're on the right track there. I think VOC. We just go back to see what the weekly's doing. Obviously, that's a good sign. You had, if you can probably go back to the monthly. Monthly's clear. Good run up to $9. Completely fell off a cliff. Okay, but what it's done by falling off a cliff is just squeezed out all these buys. So what it's done is resetting. So you're going to look for a period of basing, and whether most of the people that got in previously on that rally have either gone out and they've got a massive loss sitting on their, maybe a massive loss depending on where they got in, sitting on their books, and they're just sitting there, bottom drawer, forget about it for now. So what we'd be doing for a new trade is looking, and potentially that's what we are here. We're just starting to sit on top of the MAs. We've got our basing period through here, good part of a year. It's based. You can see the lower high still squeezing in. And if we draw that up, you'll see that it's broken the MA, broken the high low. Oh, what am I talking about? Lower high. So if we draw, why does it keep giving me that? Not so much here, but you've got a support zone through here, give or take. That's your last lower high. And we've just broken through with that pop up here. The MAs are starting to lift. Potentially, if I can get a better correction, I'd be looking at that one and looking for that, pop up through the MAs, first pullback, and somewhere in there, looking to buy off the dailies, which could be just very close, but we'll have to just wait and see. I know Paul used to got that one, haven't you? Maybe. Does that make sense there, guys? So the weekly for me, this is probably a bit tougher to hold, and it's just starting to lift, bouncing off those MAs on the daily, that reversion to the mean. It is very choppy, and that's a problem for me. Looking at that weekly, you might have a lot of room to move on the upside if a lot of people have memories, don't forget, and the memory is that it's come off the highs at $8. Whether it's readjusted fundamentally, who knows? But that's all the chart's saying. So upside potential your first upside of your technical trade is up towards, from here up towards 485. We're at 350 now, so that's a good little percentage return. Fantastic one. From there, then you'll be looking up towards 6, and then probably right up towards $9. So risk rewards is looking really good on that one at the moment. And it's just where, it's just all about the entry for now. Hope that makes sense. Alrighty. So that was VOC. We've got anything else? Is there anything else? Have I missed something? No. Just scrolling through. I think that's about it. Sun. Good on you, Bobby. One last one, hey? All right. So that weekly for me, Suncorp, is very choppy. You can see it's really whippy either side of the MAs. It doesn't really come up, hold the MAs. It takes it out, bang, down. You can see it's done it here. Then sort of chops above and below. So it's constantly whipping people out. This is probably the only significant or solid entry. If you're holding that longer term, you may be whipped out with this big pullback. This was last year, wasn't it? So ideally, looking at that, I wouldn't be confident trading that SUN just because of that weekly price action. I really don't like it. And even that monthly, that looks like it's more sideways in the monthly than, you got this nice market previously. It was way back in 2003. Dropped like a stone. That was through the GFC. Yep, through GFC, then started to lift. But since it started to lift, especially since 2016, it's been really whippy. So I think if you're trading this one off a daily, you'd probably want to be acting pretty fast, taking your profits when they're there, because you could turn around and get chopped out pretty quickly, day after day, if you haven't got tight risk, or your risk management's not spot on. From the daily, I'd probably be looking pure from the daily charts if I was going to look for, in the zones, like when it drops below the MAs on the weekly. This price action is ever so slowly on the weekly. If we draw that up, ever so slightly heading higher. And you can see through these, keeps touching down, touching down, touching down. So you've got, here, potentially here, about where we are. Maybe if it doesn't lift now, if it doesn't, it's going to head straight south. But you can see what I'm saying. It goes right below the MAs, right below the MAs. Here, a bit different. Again, here, that was looking quite positive. Pushed up here, and then straight back down, took out that low. Washed it out, lifted again, washed out the high, come back, kicked up a bit higher, washed out the previous low here. So all these sorts of things, it's really whippy, really choppy. So if you don't trade it from the weekly, but you're looking for this zone here to start to lift, and you can break it down to the, getting an entry off the daily, off your higher lows, potentially like we saw here. MAs cross up, pull back to the MAs, and then look to enter on when it's rising. Then you're really not throwing too much risk at it, and then you're taking profit off the table when it's there. Does that make sense? So looking for that pullback, potentially where we are at the moment. I mean, I wouldn't trade it. I want to see this do a lot of work, and I really would want to see those MAs. You can see the MAs here. They're not really spreading, but it's still spread apart. So the market's well and truly on the way down. You can see, we've had that press down, reversion to the mean. That's press down here, reversion to the mean. Again, reversion to the mean. Kept coming back to the MAs, holding the MAs, bang. Really squeezing people out. Probably that was a bit longer than what I wanted to do. And then reversion to the mean. So what's to say we're not heading south again, and we're going to start to trade towards that, what is it, $12 mark, 1260, 1260 zone, straight back down into 1260, those lows. But we'll see. If it can hold here and start to lift and take out this high, then I think it's going to have to do a lot of work, chop, 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 before the MAs come back in and start to rise, and then you get the lift. Probably not here, more of this type of thing, pull back the MAs and maybe, buying the break like that. Does that make sense? Something like that when you've got your risk here, it's off the MAs, starting to rise, taking out a few previous highs. That's a 2-to-1 trade if you took it off up here. MAs, sorry, the stochastics are sort of overbought. You might have to approach it a bit differently in trade, but I wouldn't be buying it just down here. But yeah. we'll get onto red, which didn't work out very well. Look, that's rising off the MAs, a good volume, this spike up here. So you can see that the add of the volume when it popped up. So it's got that initial break up. Well, not break up, but kick up. All right. So you got that initial kick up, pull back to the MAs, and ideally if you could buy in here and then it started to lift and you got that supporting volume, probably not that candle, that might have been a bit random. But even the next, even that red candle the next day, the volume's a bit higher than normal. And then it started to lift off the MAs. So that's, it would have been harder to trade if you got it on the entry on that green candle. Yeah, in hindsight, that was great. Might have been harder to trade after a gap up from 7 to 7 point whatever, 7.3, buying at 7.4. That would have been a tougher trade, but you can see it was a similar type of thing. The market's moving down, pressed up. MA's put, her first sort of pullback was back to around 6.8. And if you can see that starts to hold, you might have got in a bit early and then just took minor risk at 6.6 on that one, anticipating that was starting to hold, because the longer it goes sideways, the more likely it's going to continue up. Because if weakness is going to come in, weakness is going to be short, sharp, and fast. Does that make sense? So you wouldn't have been holding these highs around that $7 mark if the market was going to be weak. And same here. No, not so much the same here. Just go back to the weekly. So the weekly is not really showing me much. The weeklies, it is choppy. That's good washout here, washout, cleaned out a lot of buyers, grinding back up. This pullback on the weekly is sort of first pullback below the MAs is really grinding out a few buyers and starting to lift again. We've got a resistance under 8.5 where you're running straight into, which is going to cause a few issues up here at 8 to 8.5. So to buy it today, if you did buy it today, you're probably in a stretch market. It's not the unknown anymore. It's well and truly the known, especially after that secondary push higher. But yeah, we'll see how it goes. Bobby shorting there. Let's go back to that. Nice, mate. Nice. So see a Bobby shorting there. That's just reversion to the mean, shorting into that market. Great work. All right. We'll probably call it a day there, guys, only because I'm struggling talking. I hope you got something out of that that made a lot of sense to you, whether you enjoyed that. But let us know. If you have any questions, just feel free to email. I know, Gina, I've got to give you a yell, mate. I'll give you a call, or you can call me in 10, 20 minutes or so. We'll have a bit of a chat. I owe you a phone call, don't I? Anyway, if you do have any questions and something's not quite making sense, the test match, nice. Anyway, any questions that something not making sense, just give us a call or send through an email, and we'll try and get in contact just to help you out a bit. Also, on a different note, just to change the tune a bit, what we might be doing probably, end of this year, start of next year, is just going down to the one, just the one stream. Seems to be taking up a bit of time actually, but I enjoy it. But I think we'll just go back to the one stream for the week as opposed to the two. Things are getting a bit busier. They're picking up a bit, so that's probably, we'll let you know though what's happening, and we'll let you know also what's happening over Christie. Probably going to be quiet for a period just between Christie and New Year. The holiday period, everyone's going away. I'm going away there. If we've got any trades on, we will be alerting to those anyway, just to keep you up to date. But anything new, there won't be too much new going on anyway. But I'll send out an alert through the app, the TradeSetup app, to what's happening. Any questions, again, like I said, just shoot us an email. Anyway, guys, thanks very much for joining me. Hope you enjoy your next couple of days and the weekend, and then we'll see you again on Monday. Have a great weekend, guys. Thanks for joining me, and we'll speak to you then. Bye.